My name is Sebastian, I'm co-founder and CTO of Validity Labs. So we've been around pretty much literally since Ethereum DevCon 1. Started with education in the space, and we're building quite some things. And obviously what we were building also quite a bit was tokens, right? And what we've seen in the past year, and which is what I want to briefly talk about, is what happened to tokens and the innovation and R&D that we've seen in the token space, which we take out to the real world, right? That's already there, that did not care so far about crypto. And yeah, to really enable that, in Switzerland there's some movement going on right now on these so-called DLT rights. And I want to briefly talk about what this is and how you can implement that today. So this kind of legal framework has been published in Switzerland end of March, and the political system of Switzerland works a little bit different from here. So basically a law is being presented to the public, which can then comment. You can, by the way, also do that. You don't have to be in Switzerland, you can just comment on it. And aims to basically increase the legal certainty around tokenized investments in traditional shares, right? Because there's a large number of investors which just cannot invest in utility token payment tokens. So we expect that this will come into effect in around 1.5 years to 2 years. One important thing is that it is principle-based. So you will not see the word blockchain in there. You will not see the word Ethereum in there, because things are supposed to be kind of neutral. Also, it's kind of lean compared to Liechtenstein. It's just an 80 pages thing. So if you are kind of into this, you will be able to follow it. Now, what does it actually comprise? It does not, for example, compared to other jurisdictions, your DLT right, which you're issuing, does not require a formal audit, right? So you don't get governmental sign-off. It provides you with protection in case of an insolvency case of the custodian, and this is important if you're a fund and want to invest in these things and there's some custodian going bankrupt. You of course should make sure that your tokens that you're holding are not part of the insolvency mess. And what is also important to mention is that this is about centralized trading, right? So centralized trading venues are controlled under this law. Decentralized exchanges are not being touched by this, and I think this is quite helpful. Now, briefly, if we have these rights, and hopefully this will come in effect in about a year and a half, how would we do this? Could we use the amazing technology that we talk about here, Ethereum, public chains, right? Can we use that stuff? And the answer is, and here we worked with our friends from Homburger, it's the largest M&A firm, legal law firm in Switzerland, and the answer is yes, you can. And I want to present briefly a couple of core features that I like quite a bit about it. So basically we built this thing on Ethereum as a smart contract ensemble, which you can basically, you can pick pieces and assemble them however you need them, right? So we have the token, which is a shareholder register. We have a whitelist for compliant dividend claims. The nice thing I would like to point out here is that tokens are freely transferable. Now, why is this cool? Because we can use all the DEXs, we can use 0x, we can use all the infrastructure that we have being compliant with the law. So only if you claim your dividend at that point in time, you need to be on a whitelist, right? Or if you wanted to do some voting, then you need to be on a whitelist, but you can freely transfer your token, and the law is not standing in the way of kind of our decentralized trading of shares, which I find really remarkable. Now specifically, so basically you can take these Lego pieces and combine them, right? And you can also go then in a second dimension on a token. So it's an ERC20 token. It needs to be pausable, and it's kind of important that the board of the company will have some centralized power. And maybe also there, just briefly point out, you're investing in a company which is not arbitrarily decentralized. But what this will provide is kind of, in my eyes, a graceful transition to a DAOization. So today we do need, for example, this forced transfer. So for example, if somebody is insolvent, the board of the company needs to be able, upon court order, to transfer shares away from you. And I do understand this is a centralized component, but that's simply what companies today are required to do. Document registry, so you can link some documents such as the articles of association to your token. And as before mentioned, the whitelist for dividend and voting. but this is, again, not required for transfers. And a snapshot mechanism, some of you might have seen these implementation. We recently got that merged into the Open Zeppelin library that allows us to track past token balances in order to claim a dividend on a record date. Yeah, and with that, I think we can head over to the discussion.
So Token House, is that operational now? What status is it at?
So basically we said that under Token House, you can check it out, we have a little dApp running. So if you have a compliant token that allows you to claim a dividend, it's just a front end that people can use in order to claim dividend, check their portfolio, and so forth.
And how important was the fact that there was legislation that was put in place behind it? Is it the government? At what level of the government there is backing here?
Yeah, so it's basically changes to a bunch of different laws in Switzerland. It's not one law, it's a combination of the insolvency law, of the Swiss securities laws, and some of the code of obligations, as it's called in Switzerland, that need to be changed so that it's possible to natively trade an ERC20 token, which is not a financial derivative, but really a share. So if you do an ERC20 transfer or transfer from, this transfers the title of the share to another party with all the claims and rights.
Great. Why don't we move to Heinrich, and you've been involved as well in a lot of projects, and what are you seeing in terms of innovation that you can talk about? What are some interesting cases that we can expect to see that you're involved with?
Yeah, I mean, we started 2.5 years with the first security token for Lücke. It's a Swiss crypto exchange. The interesting thing there was we tried to create a token that is as close to equity as possible. And the special thing also, it had and still has a conversion right into equity. So even if you own only one token and 100 tokens and one share, you could ask to be converted, to convert this in equity and true equity. And the idea was to give safety to investors because everybody felt a little bit unsure. And the good thing was, as Lücke is an exchange, we were allowed to trade in the tokens, could gain a lot of experience. We issued then a Lücke 1-year coin, actually 1 year later, that gives you the right to a Lücke coin after a 1-year holding period, so 1 year forward. That worked. And then we issued also a Lücke 2-year coin on the initial Lücke coin, and also that worked. So you can issue also financial instruments, and the community takes it. Beginning of last year, we did a dual token offering for a company called Smart Containers. They do supply chain management in the pharmaceutical sector with the help of blockchain. And so we created a dividend token for the company so that you can participate in the company's success, and a utility token for the blockchain platform. We just simply did a carve out of the platform. And the reason for the dual token offering was two things. One, to appeal to different type of investors. You know, more conservative investors, they would go to the security token, whereas more crypto-minded investors want the utility token that maybe is easier to sell and to trade. And that worked, basically. You know, people bought this or that, and most of them bought a mix of both. And then, last but not least, we did for Securities last year a token that is where we try to make the best template of a security token, which was a participation right, so like non-voting shares. And if you hold enough of this participation right, you would have again a conversion right into equity, again to appeal to conservative investors, as you know we all are at the moment in a very conservative market.
Where are they being traded? Is there an exchange? What's the medium of exchange between the owners of these tokens?
Yeah, that's the big trouble until today, that they cannot be traded. You know, I mean, Lücke was an exception because we were our own exchange, but other than that, they cannot be traded. So even the coins that we receive, we have them in our private wallet and can look at it every day, but we cannot trade them. But of course, I'm very optimistic that within 6 to 9 months we will have a handful of exchanges worldwide that from tier 1 locations will have a license. Lücke will certainly be one of them.
So based on that, Josh, you're mostly focused in the U.S., contrasting to what we've just heard in Switzerland. Are we kind of about at the same level, and what are you seeing in terms of innovation and applications of security tokens here?
Yeah, I think right now, I think mere adoption is innovation. So, what we were talking about backstage is some of the criticism is, well, you're just creating a token of a pre-existing structure. It's a digital share, and so how's that any different or innovative? I think it comes with, as you get more widespread adoption, that enables you to do things that you can otherwise do. I think sort of short-term innovation is lowering investment amounts and enabling liquidity where there wasn't before. So we're working with some folks who already have an existing installed base of investors. They issue debt. And right now it's a minimum of $100,000 to $500,000 to invest, and there's no liquidity. Working with them to tokenize their existing note holders, break those notes down into $10,000 chunks, and then allow those to trade freely amongst the investors, and then eventually to open it up. So the short-term effect is to enable liquidity where today the liquidity isn't there, and to enable people to come in at a lower check size. And then as things get more efficient, you can continue to lower those check sizes. So after a year, non-accrediteds can buy in. If you become efficient in how you can trade, and especially how you can later give out distributions or dividends, the payments, the coupon on it, you can start breaking those down into smaller and smaller sizes. And then what I think becomes really interesting is those then tie into the DeFi structure that today exists only on protocol tokens or cryptocurrency. So when you have real estate-backed bonds or debt notes, and they start circulating freely, you can start to leverage them with DYDX. You can put them together into more diverse portfolios on a very bespoke basis using SET protocol. You can get increased credit on them using Dharma or MakerDAO, when MakerDAO goes to multi-collateral contracts. And so I think the innovation today is just the adoption, the unlocking of this latent desire for liquidity and private investments that don't exist today. That then leads very quickly, I think, to lower unbundling into smaller units, so it's not as big a check, more participation from more investors, and then that leads you into some really innovative financial models. Long term, I think what becomes truly enormously innovative is when you start to see securities that live only on chain.
Exactly, native ones. That's what I wanted to get to.
Native digital securities, yes.
Yeah. When are we going to see more native tokens where there's no equivalency outside?
When are we going to see widespread adoption of dApps that drive revenue?
Yeah. Oh.
That's the killer, right? So on-chain securities that are actually deriving the revenues from on-chain are dependent on on-chain economic activity from which they're dividending out or sending those cash flows of value. If there's not widespread adoption of dApps that drive value, you can't really have security tokens based on it. I think the one exception would be you could do tokenized ETFs or some other variants that are investing only in cryptocurrencies. But fundamentally, I think when you start to see on-chain payment flows for on-chain activity, you can then securitize those the same way you securitize cash flows today from real-world assets.
You said earlier about DeFi, so it seems that DeFi is going to be a recipient of security tokens. So a lot of the DeFi apps will be the places where they'll be traded, but also we're waiting for what is called security exchanges, like the open finance of the world. How far are we from that liquidity becoming more public and more publicly available?
So the issue there is really getting the investments out, it's a critical mass of investments and investors. So the technology tokenization helps, we call it unlocking liquidity. It removes the logistical or practical barriers to trade. Today for real world assets that are private securities, it's all paper-based, it's expensive, it's protracted. But you still need buyers and sellers who want to transact, right? You can have the best technology in the world, but if nobody wants to sell or nobody wants to buy, or they don't have enough information to arrive at a fair price, get price discovery, then the best technology in the world will not give you liquidity. So, I think that's when I say that mere adoption is innovation, that's really what we're facing right now, is how do you get that initial adoption? And so we're most excited. We're working with some folks who are raising capital today, and they think that using a modern fundraising platform and offering a liquidity option will help them attract more capital. We are really excited about working with folks who have installed bases of investors. We're working with a series of funds. They've got 1,100 investors in their current funds, and they're already seeing demands to trade in a paper-based world that's expensive and slow and a pain in the ass. And so we think we can really turbocharge that liquidity. And then they want to open up to other investors, bring down the investment amounts. So it's going to be an incremental process over time, but it's like a fission reaction. You got to hit critical mass before it really takes off.
Are we going to see less barriers between European markets and, let's say, North American markets and Asian markets? How do you see this play out in the future?
Yeah, so I mean, the one example, we talked a little bit about this before, is what I'm quite excited and I hope this is going to go through like this, is that in Switzerland we don't have, for example, one specific example, like we don't have barriers on the transfer, right? And if we manage to get away with this, which would be fantastic, then we could use these DeFi apps as they are today, right? Because like Dharma, Maker, like 0x, that stuff works with vanilla ERC20. If we manage to use securities, or let's talk more specifically about shares, for example, if we manage to transfer that, it's a huge asset class, right? And if we manage to keep the kind of legal groundwork in a way that is compatible, then it would be fantastic. And to me, kind of on a, like, what's the roadmap there? So we now have the technical infrastructure. I think we're all here aware that that kind of works. We start seeing in multiple jurisdictions, so we see that in Switzerland and Liechtenstein specifically, we see the legal infrastructure for that, right? And the third one would then be the kind of financial market readiness. So for example, like fiat, on-chain fiat, and we see in Switzerland multiple banks working on that. So there's multiple like new upcoming kind of crypto banks, as well as like larger established financial institutions that are going to bring us fiat that's on-chain. And when we have these three pillars, then I think it's just a matter of time until we will really get there to more efficient capital markets, right? That allows us to issue, trade, and manage these securities on-chain.
At the global scale. But then what happens to regulation? Because as much as the technology is global, regulation is not global. Regulation is local. So it's a barrier.
Yeah. No, absolutely. But we have the same thing today, right? So we have the same thing today that you're issuing, and I mean, getting where we are today is already good on chain. So we have different jurisdictions. If I'm an issuer in Switzerland and if I'm an issuer in the US, right?
What's interesting is it's very different country to country. So Sebastian was talking about legal innovation, the law I was talking about earlier. They need that legal innovation because there's a requirement that all these shares be in paper and they have to have certain signatures. So in order to tokenize them, you need a legal foundation to do it. Here in the US, we have the concept of uncertificated book entry securities. So you don't need that legal innovation for non-registered securities, for private placements. So you can go ahead and do that today. All of Harbor security tokens are ERC20 standard. They're plug and play compatible with things like MakerDAO, DYDX, Dharma, and others. So it's going to be country by country. It's going to vary. But your point about expanded markets, because this is based on standardized technology, where all you need is access to the internet to get to it, I think you will see more access from more folks. Whereas today, when you do private placements or private capital, your evidence of ownership is a piece of paper locked in the desk drawer of an attorney who's a continent away who keeps really inconvenient office hours.
You've been going to Asia, Singapore specifically, and like, what's the linkage between Switzerland and Singapore? Why? And how do you leverage another jurisdiction?
They're interestingly very, very similar. I mean, you nearly could say that Singapore is like a Switzerland in Asia. Yeah? And I was just in the last 2 weeks there again, and we opened an office also there. Also, the Singaporean government, they issued their token guidance with in total 10 use cases. And that was super pragmatic formulated. So I think there you really see a few tier 1 regulators rushing ahead, giving really good guidance out and safety out for token offerings. Switzerland is certainly one of them. Singapore is one of them. Liechtenstein, I think, did a big step in interpreting the laws. I think we will see a tiering of markets. We will see tier 1 locations that are respected all over the world: Germany, US, Switzerland, Singapore. And then we see, and Liechtenstein tries to be in that tier 1. And then we see the tier 2 markets that in the financial world, that then the next step also to the offshore markets, and where there will be a little bit more flexibility. But probably the more important security token offerings will happening in the tier 1 markets. Yeah? And then smaller ones will go to the tier 2 markets.
What can we expect in the US? I mean, has there been any progressive government actions or work that give you a lot of optimism at this point?
The short answer is no. So I think there's two different sort of aspects of friction. One is how does the existing legal regimes apply to security tokens in the US? We actually think for non-registered securities, or even for registered securities, it's very clear, and you can actually comply with the rules. That's the whole business reason for having a company like Harbor, and it's very doable. I think the other barrier, though, is the entities that participate need licensure. Exchanges need an ATS license in the US. People selling this need a broker-dealer license. If you're going to do what Harbor does for registered securities, i.e. like you file an S1 for like an IPO, you then need a transfer agent license. There's all this licensure, and the licensure is the holdup, because licensure is granted at the discretion of the governing body, the SEC, FINRA, state bank examiners, FDIC, Comptroller of the Currency. They, once you have a license, then you have a lot more leverage in terms of what you do and what the rules say. But the granting of the license is very discretionary, and there's a lot of people who filed to do tokenized Reg A's, tokenized IPOs, and those are hung up. There are a lot of people who have filed for broker-dealer licenses, ATS licenses, transfer agent licenses, and again, a lot of those are held up. And I don't know when that moves. It's been difficult to divine when the agencies will really start to move on that.
So it's the story we've been hearing throughout the day.
Yeah. In other words, where you don't need to rely on the discretion of the agency, things actually work quite well today, and that's why everyone's doing what they call a Reg D in the US, or a private placement, because you don't need to get approval to do it. You file a short form and you can just go ahead and do it. Where you need the approval that's in the discretion of an agency, that's where things are gummed up.
If I were to take the analogy of CryptoKitties and what it did for the blockchain last year, and then kind of it galvanized this new movement of NFTs, it is something new that doesn't have any equivalent outside. Is there a CryptoKitties moment for security tokens? And what would that be, do you think?
Yeah, let me try. So what I think it produces is just a step 1, really, right? So basically step 1 that we're at right now is tokenizing these securities. Step 2 for me is kind of tokenizing or also on-chainifying the governance of a company. And you know, if you think about what this really is and means, this is a DAO. So to me, what this really leads to is kind of this global hyper-DAOization, if I may say so. So with security tokens, we do a step 1 of bringing all the fantastic visions of the Aragons, of the DAO stacks, all that stuff really to life. And I find this amazing, that we really provide the foundational basis of bringing large-scale companies one step closer towards this amazing dream of DAOs. And I can just recommend again the introduction section of the DAO white paper, right, where they talked about all that in great depth. So this is what we're really enabling with security tokens.
Okay, I haven't heard anything that's moving me yet, but I like the vision. I'm going to keep challenging you. Heinrich, do you think there's going to be a CryptoKitties moment for securities, and what would that be?
I mean, if we have, if we manage to bring security tokens that are traded on, like, I don't know, Kyber or Uniswap, it's just a natural path how things going to go, right? Because if you're a trader, I mean, you're not exactly like tied very closely to one securities exchange. Where are you going to go? You're going to go where you have the best price finding, the highest liquidity, and the lowest fees. And what is that going to be? It's going to be a market which is not owned by anybody, aka a DEX, right? So that's what I really see when there will be a massive influx into this fantastic technology when it really shines.
I think the CryptoKitties moment looks very differently for different audiences. A CryptoKitties moment for traditional financial markets is when, wow, all of a sudden the debt markets start to work really efficiently. Wow, all of a sudden all this private placement real estate work that today is impossible to get out of all of a sudden starts to become liquid and people can combine them and create investment theses they couldn't before. That's going to be a much longer time frame, but the value to be unlocked is vast. The CryptoKittys moment, I think, for folks in here, like in the blockchain space, is when you get those digitally native securities and or when you start to see tokenized equity in some of these blockchain startups, right? Kind of like what Heinrich's doing, you start to get that moment where the stuff's trading freely and it's really interesting. Why did people get so excited about ICOs? Because it was just like investing in the company. It was just like being a venture capitalist. I evaluated the team. I evaluated the white paper. What's a white paper? It's a pitch deck. And then I took a look at the tech and I made a bet, and maybe I'd lose, but if I'd won, I'd win big. It was very much that VC investment thesis opened up to average people. The issue you get is the fat protocol thesis actually going to pan out, and how's that work? I think when you have tokenized equity in these startups, that's a similar moment. You're making that same gamble, only it's with equity in the company. And so the moment at which you start to see tokenized equity in these blockchain-based startups, that's similar to an ICO moment, only with a real legal right behind the investment. And I think once you get a few of those and they start to trade and some of those companies take off and that equity becomes very valuable, then the animal spirits in all of us get excited, and then that's your CryptoKittys moment.
Okay, that's good.
I mean, we had in Germany, I would say, a mini CryptoKittys moment with a token that was called Bitbond. The BaFin was approving for the first time the prospectus of a security token that was a bond. Yeah, so which is most people talk about tokenizing equity, but in reality, a super interesting category is tokenizing debt. You know, like in the larger corporation world, where you either issue shares in your company or you issue debt in your company through bonds. I think that will be an interesting category. The larger CryptoKittys moment maybe is for the first time when you hold a wallet of a regulated exchange and you have like 20, 30 different tokens for choice, where a third is maybe equity tokens, another third are real estate tokens, and another third are fixed income products. Then for the first time we say, oh, wow, now I can create my portfolio instead of going to the bank where I have to buy shares. Yeah,
Heinrich is right. And I think it's really that moment when you have that Robinhood app. Robinhood took off, no commission trades. What's interesting is these stats are, I think, close. It's been a little while since I studied up on it, but something like 85% of the trades are stocks priced between $2 and $10. It's not because the younger millennials on Robinhood have a real bias towards value stocks. It's because that's a low price entry point, and they're using it in line at the supermarket. They're using it in commercials during or before or after Game of Thrones. And it's in essence taking the place of gambling apps. And I think people like that. That's what's the speculation and the sense of being invested in something. And I think when you have that Robinhood app, when you have that critical mass of interesting investment opportunities that are priced at price points that people can get easy access to, with things that they're emotionally invested in, esports teams, blockchain-based companies, the same things that excite ICOs, that's your CryptoKittys moment where everybody wants to get on it and they want to trade and they want to talk about it, and they'll be all over Reddit and everywhere else.
I heard recently that the last year, $400 million were raised in security tokens versus $20 million the year before. So short answer from you, where do you think we're going to be, let's say, a year from now in this space? And let's say if we come back here a year from now. Quickly, short answer.
I would say in a year from now, we do see the first native tokens that are native securities which live on-chain and are step one to this DAO space. And we're going to see the first exchanges where we can move that stuff around.
Good.
Yeah, I would say my hope is that in a year from now, we are like we were in second quarter 2017, when we have so now then regulated exchanges, we have sort of 100 tokens, 200 tokens that are traded, and we see a lot of movement into that. That would be exciting.
Yes.
I think a year from now, you start to see real liquidity. In the US, at least, the way the rules work, even once you finish the fundraising and you issue the token, there's usually a 1-year lockup. So you're just now seeing stuff come up lockups. There's going to be a lot more to come off lockups over the next year. And then I think you'll just start to see trading. But I think you'll just start to see the beginnings, like it'll just start to become real a year from now. I think 2 years from now is when all of a sudden everyone's like, wow, this is really something real. And then you'll start to see people really pile in.
Great. On that note, thank you very much for the panel.